Video archive 45. LPSN long. Trade duration 41 trading days. Entry, average entry. I scaled into this position. I'll explain further when I get to the charts. 95 cents. Exits, multiple exits. I scaled out. 132, 169, 182, and $2. In the same order, gains 39%, 78%, 91.6%, and 110.5%. Stop loss set at 72 cents. This is my trading charted. All right, I'm in a different setup here, so bear with me for a sec. We're going to share screen. All right, this is my trade. It's a pretty straightforward trade. Not much going on here. As you can see, I have a channel on the chart, which represents kind of the macro formation that we're in. And as you can see, this bottom trend line of the channel is the lowest risk entry. So this trade's a little messy because I started entering at the center line here and canceled my stop loss impulsively during a drunk week in Florida with some people from the trading group. So I had a position at about it was a 115 was my average. But when it dropped down to this bottom side and I was holding on to my position, so it looked something like this. I averaged all the way down to the point where my average was 95 cents. Most of that buying got done around 78 to 82 cents is where, it was a lot of different transactions. But and then I basically entered based on this channel. And then I used the RSI signature a little bit as more confirmation. Because as you can see here, you have some divergence, which ended up giving us a retest of the center line of the RSI where price failed. Halfway up this candle, you can see that was prior resistance right here. And then you can see we came down to basically the same low right here on this second low. Boom, 1, 2. But we're out of the bearish control zone, and it's kind of like this rising tide signature you get on the RSI as price takes back the center line and postures itself bullishly. My exits. Actually, one other reason I entered right there was this golden pocket, which I'll show you. You could, it's to a point, it's subjective. Here would be my, you see, we've touched the top side of the golden pocket there at 76.33, and I believe the low was 76.3. Yeah, so within 3/10,000ths of a penny. If you draw from this more, arguably more relevant low, you can see we came into the golden pocket, tested the bottom of the channel, fake out right here, which was probably a specific horizontal. But yeah, so that golden pocket was just like another layer of confluence. Let's go Eagles. Another layer of confluence for my entry. My exit points were pretty straightforward. Instead of trailing this with following this with a trailing stop or setting a stop loss once it went in my favor here, because as you can see, once the trade went into my favor at this point in December, it happened quickly and violently. I just selected areas to take profit. I took part of my position off here because we're testing the center line, and I was kind of, I don't really look at fractals or anything like that, but I do look at previous behavior. And you can see the behavior in price here was a test of the center line, fail, back to the bottom, test of the center line, significant retrace, and then it breaks up to the top half of the channel. So part of me was like, all right, I should take a portion of my position off here just in case we do come back for another test. Even though we clearly had 2 here, that didn't mean, that to me, that's arguably 2 right there. So I wasn't trying to look at it as if it was a fractal. And yeah, whatever the saying goes with history doesn't repeat, it rhymes. So there's one of my exits right there at 132, which if I draw a fib on from the 179 high right here down to the lows here, you can see that's also a golden pocket, 130 to 133. So that's one reason. That's the reasoning for my first exit. My second exit was 169. Actually, I should keep that fib on. And 182, which you can see the 886 is here at 163. There wasn't really time because I just woke up in the morning and saw price was at $2. I will happen to wake up when price spent its these two 5 minute candles were priced, or 3 minute, is that three? No, these two 5 minute candles where price was above $2. And so that's where I took my profit on the $2 exit. And the 182 and the 169. It all really just happened in this 1 day candle where things got super volatile. We had this strong rejection, and when I started seeing that take form, you see that big wick down. That's when I started taking profits, and I kind of just sold it on the fly whimsically because I was up significantly. I'd taken a huge position. This was my biggest ever gain. Um, so I felt pressure to take this trade off. So I sold basically all of my position. I'll do the math real quick. Yeah, so I left 12% of my position on the I still have about 12% of it. I took the rest off though during this extreme bout of volatility. I've got two more trades that occurred recently in this volatility. It kind of overlaps with this to some degree, but they're in separate accounts and separate reasoning. So I will now visit those.